Okay, let's unpack this. Today we're diving into Manulife Financial Corporation's second quarter 2025 results. Our source? Well, it's their recent comprehensive earnings report. You might see the headline, sure, but our mission really is to go much deeper. We want to pull out the most important insights so you can truly understand Manulife's strategic moves, what's driving their performance, and crucially, what it signals for the wider financial landscape. We're going to explore some surprising growth areas, key acquisitions, and how they're absolutely leaning into cutting-edge tech like AI.
And what's truly fascinating here, I think, is how different financial metrics can sometimes tell slightly varied stories. Each one reflects strategic choices and those external pressures. So when you first glance at Manulife's core earnings, they sit at $1.7 billion. Now, on a constant exchange rate basis, which, just means adjusting for currency swings for a clear year-over-year look, that's actually a 2% decrease compared to Q2 of 2024.
Right, and that 2% dip might make you pause until you look a bit closer, because the report, it clarifies pretty quickly that if you exclude the impact of the change in expected credit loss, or ECL, which is basically setting aside money for potential future loan bumps.
Exactly, a provision for a potential default.
Right. If you exclude that, their core earnings actually climbed to $1.8 billion. That's a 2% increase from last year. So that exclusion, it seems to paint a much clearer picture of their sort of underlying operational health.
Precisely. Yeah, the excluding ECL figure gives you a better sense of how the core business is truly performing day to day. And beyond that, the net income attributed to shareholders, that saw a really significant jump, up to $1.8 billion. That's a $0.7 billion increase from Q2 2024. Diluted earnings per common share, EPS, also surged. It hit 98 cents, which is an impressive 88% increase on that constant exchange rate basis from last year.
Okay, so the main profit numbers look pretty solid, especially when you dig in a bit. But what about the future stuff? The indicators for new business, are they building that pipeline effectively?
Oh, absolutely. And this is where it gets really interesting, I think. The robust growth in new business metrics, well, that's a powerful signal for future potential. For instance, APE sales, that's annualized premium equivalent, sort of a standard measure for new insurance and annuity business, they were up 15%.
15%, okay.
Yeah, and then new business contractual service margin, CSM, which is essentially the future profit baked into new insurance contracts that gets recognized over time, that surged 37% on a constant exchange rate basis.
Wow, 37.
And new business value, or NBV, which measures the expected profitability of that new business they just wrote, up a solid 20%. So these aren't just, one-off wins. They really point to a strong foundation for future earnings.
That's a great breakdown of the core numbers. Thanks. Let's shift gears a bit to the high-level strategy, the view from the top, because the executive commentary, it always offers that crucial perspective, right? Phil Witherington, Manulife's president and CEO, he highlighted the strength and resilience of our global franchise and how they're delivering high-quality growth across the diversified portfolio. What really struck me was his excitement that, quote, all three insurance segments achieved over 30% growth year over year in new business CSM. What does that really tell us?
Well, if we connect that to the bigger picture, it tells us they're not just growing, they're growing profitably in their most important areas. It also underscores Manulife's strategic focus. They're putting their energy into what they call their highest potential businesses. And that includes places like Asia, global wealth and asset management, Canada group benefits, and those North American behavioral insurance products. Now, Colin Simpson, their CFO, he did acknowledge some headwinds.
Specifically, unfavorable life insurance claims experience in the U.S. and also strengthened expected credit loss provisions, which, is a responsible approach preparing for potential future credit risks.
So acknowledging the challenges, but still reinforcing the sort of underlying strength of the company overall.
Precisely. He emphasized the robust underlying fundamentals and pointed to strong earnings growth in global WAM, Asia, and Canada, all supported, importantly, by
impressive continued expense discipline. They cut overall core expenses by 3%.
That's significant. Shows operational focus.
Definitely. And it shows their commitment to operational... Yeah, let's do it. Let's start with Asia. It truly continues to be a powerhouse for Manulife. Core earnings were up an impressive 13%. That was driven by strong business growth, some favorable claims experience, and the positive impact of all that new business coming in. APE sales, that new business measure, surged 31%, with particularly strong volumes coming from both Hong Kong and what they bundle as Asia other markets. New business CSM, that future profit metric, up 34%, and new business value increased by 28%. So, I mean, this region is just consistently delivering strong numbers.
That really is explosive growth in Asia.
Yeah.
Okay, how did global wealth and asset management, or global WAM, stack up?
Global WAM also delivered exceptionally strong core earnings growth, up 19%. This is propelled mostly by higher net fee income, helped by favorable markets and positive net flows, plus higher performance fees. And again, amplified by their expense discipline. They also saw net inflows of $0.9 billion, which is a significant jump from just $0.1 billion in Q2 last year.
Big turnaround on flows.
Huge. But the major news here, I think, is Manulife's agreement to acquire a 75% stake in Comvest Credit Partners. This deal, it's expected to close in Q4 of 2025, and it's going to add a substantial US $14.7 billion to their global WAM platform. This significantly expands their private credit capabilities. It's a really strategic move to tap into a rapidly growing alternative asset class.
Sounds like it. A big bet on private credit.
Yeah. And one more thing on WAM. Its core EBITDA margin, that's earnings before interest, taxes, depreciation, and amortization, a key profitability measure, expanded by 380 basis points. That's 3.8 percentage points.
Up to 30.1%.
Very healthy margin expansion. Okay, that Comvest acquisition really sounds like a forward-looking play, strengthening their position in alts. What about Canada? Their home turf, how did that look?
Canada was, well, a bit of a mixed bag, you could say, but with underlying strength in specific areas. Core earnings were up 4%. Modest, but positive. APE sales, however, were down 34%. And this was largely due to what they call the non-recurrence of a large case group insurance sale back in Q2 of 2024. Ah, okay. So a tough comparison from last year.
Exactly. Think of it like a huge one-off deal last year that just didn't repeat this quarter. So it makes the year-over-year number look, well, worse than the underlying trend, perhaps. Despite that drop in APE sales, the new business CSM actually increased a robust 32%, driven mainly by strong individual insurance sales. And even with the APE sales dip, the new business value, NBV, still managed to increase 1%, mostly due to a more favorable product mix. So they kind of managed to maintain the profitability of new business despite that big comparison hurdle.
So navigating that large case anomaly pretty well, it sounds like. And finally, the U.S. segment. We heard earlier it faced some headwinds.
That's right. Yeah, the U.S. segment definitely faced some challenges this quarter. But it's also showing signs of, let's say, strategic adaptation. Core earnings decreased 53%. Pretty significant. And that was primarily due to that unfavorable life insurance claims experience we mentioned, lower investment spreads, and those strengthened ECL provisions.
Okay, so a few factors hitting them there.
Yeah, several things hitting at once. But despite these challenges, which are significant, look at the new business side. APE sales were up a remarkable 40%. New business CSM increased 59%, and MBV was up 12%.
Wow, that's quite a contrast to the core earnings drop.
It is, and it reflects continued strong demand for their accumulation insurance products. It suggests that while maybe some older blocks of business face challenges, their new sales efforts, their new products are really thriving.
Okay, so we've covered the numbers, the segments.
Mm-hmm.
But beyond the figures, a huge theme across all of Manulife's communications seems to be their strategic investment in technology, particularly AI. How deep does this integration actually go?
Oh, it's very deep, and it seems to be paying off. Get this, Manulife was actually ranked first in the life insurance sector for AI maturity in the inaugural Evident AI Index for insurance. And they were in the top 5 across the entire insurance industry globally. So they're not just, dabbling, they're embedding AI extensively across the board.
First in the sector, that's impressive. What are some examples?
Well, in Global WAM, for example, they launched an AI-powered sales enablement solution over in U.S. retirement. The impact. They say it doubled the number of sales opportunities compared with Q2 last year, and it reduced the time their people spent just searching for information by over 50%.
Okay, that's a direct, tangible impact. More efficient sales, better use of time. Makes sense.
Exactly. Then in Asia, they rolled out something called Voice in Singapore and Japan. It's described as a multi-signal dashboard using generative AI to analyze call center transcripts. Think of it like an AI assistant listening in, helping them categorize data, find correlations, customize insights, all by analyzing near real-time trends from customer interactions.
Ah, so leveraging AI for real-time customer insights, that feels like a potential game changer for service.
It really could be. Improves understanding of customer sentiment, enhances service, even helps with agent training, presumably. And in the U.S., they launched Gen AI functionality in long-term care, LTC. The goal there is to enhance automated claims processing. They say this not only strengthens the value of their LTC business, but also gives them crucial insights for future innovations in that space.
Interesting application of claims.
Yeah, and in Canada, they launched an end-to-end digital travel insurance platform, modernizing the experience for
Distributors, simplifying the purchasing process for Canadians. Pretty straightforward digital upgrade there. And back in Global WAM again, in Singapore, they enhanced their Manulife iFinDS platform.
So AI isn't just one project, it's being woven into operations everywhere. Now, beyond the tech, Manulife is also actively strengthening how they reach customers and what products they offer, right? Expanding their footprint.
Absolutely. That's a critical piece of their growth strategy alongside the tech. In Asia, for instance, they showcase the strength of their agency force. They had a remarkable 23% year-over-year increase in million-dollar roundtable members, MDRT members for Manulife Asia. Now, MDRT, that's a globally recognized standard for the absolute top-performing life insurance and financial services professionals.
Right, hitting MDRT is a big deal for an agent.
Huge deal. So this achievement positions Manulife as the third largest globally in 2025 MDRT membership. It speaks directly to the quality and, frankly, the sales effectiveness of their agents in that key region.
That's a powerful indicator of their sales engine's health. And I saw something about geographic expansion, too.
Yes, exactly. Also in Asia, but focusing on the Middle East connection. They became the first international life insurer to establish an office in the Dubai International Financial Center, the DIFC. This office is specifically dedicated to advising and offering life insurance to high net worth customers. It's clearly a strategic move to deepen their presence in the Middle East, which is a key growth market for global financial services, especially HNW.
Tapping into that wealth hub. Okay, what about product expansions?
Yep. On the product side, in Global WAM, they expanded their global retail product lineup. They launched a diversified real asset strategy in Malaysia, and they introduced 4 new actively managed ETF series up in Canada, exchange-traded funds.
Got it. And there was a significant partnership in Canada to highlight as well, wasn't there?
Yes, absolutely. In Canada, they partnered with Maven Clinic, which is apparently the world's largest virtual clinic focused on women's and family health. This partnership allows eligible group benefits members 24/7 virtual access to personalized support. Things like fertility, maternity, parenting, even menopause support. It's quite a significant initiative, really. Addresses critical care gaps that impact women's health and, workforce participation. Reflects a broader trend in more holistic employee benefits.
That's an interesting and very
Relevant partnership. And in the U.S., any distribution moves?
Yes, in the U.S., they expanded their wholesaling team. The goal is to pursue more targeted growth strategies specifically. Yeah, good question. It's an important accounting measure under the newer IFRS 17 rules. Put simply, CSM, contractual service margin, it essentially represents the future profit from insurance contracts that Manulife expects to earn and will recognize in its income statement over time as they provide the services under those contracts.
But it's like booked future profit from insurance they've already sold.
That's a pretty good way to think about it, yeah. It reflects the profitability embedded in their existing and new insurance business, so its significance is huge. Growth in CSM, especially from new business, gives you real insight into the company's future earnings potential from its core insurance operations. And just to put a number on it, Manulife's total CSM balance was $22.3 billion, that's billion with a B, as of June 30, 2025. That was an increase of $189 million just since the end of last year. With organic CSM movement, basically growth from their own operations contributing $1.16 billion in the first half of the year, representing an 11% annualized growth rate, it's a key metric they're focused on growing.
Okay, thanks for clarifying CSM. The context is really helpful. So let's try to wrap this up. If we summarize Manulife's Q2 2025 results, we're really seeing a company dynamically navigating, well, quite varied market conditions. There's exceptionally strong growth in key segments like Asia and global wealth and asset management. That's clear. And that growth is being bolstered by strategic acquisitions, like that significant move with Comvest in private credit.
Right.
And perhaps most notably, as we discussed, they're demonstrating really aggressive adoption of AI and digital solutions right across all segments, all aimed at enhancing efficiency, customer experience, and sales. And alongside that, they're continuing to expand their distribution channels and product offerings in targeted markets globally. It's a multi-pronged strategy.
Absolutely. And looking at all this, it really raises an important question, perhaps for you, the listener, to think about. As these global financial services companies like Manulife increasingly integrate sophisticated AI into their operations, and as they expand into new digital frontiers, launching new platforms, new partnerships, how might this fundamentally change the way you interact with your own financial providers, your wealth managers, your insurance companies? How will your experience change in the years to come? It's definitely a trend that's reshaping the industry, and it's well worth observing its impact on your own financial future.